Welcome to Market Nerd, where seasoned analysts break down listed companies on the Philippine Stock Exchange. Don't forget to like, subscribe, and hit the bell to get the latest developments and investment ideas in the financial markets. Let's dive in.
Welcome back to the deep dive. You know how this works. You give us the source material, and we dig through it for the key takeaways, just for you.
That's right.
Today we're looking at COSCO Capital, Inc. We've got their 2024 audited financial statement and the annual report.
Yep, the official stuff.
And our mission, really, is to unpack their financial story, where the money's coming from, how profitable they are, and maybe get a sense of what's next. All based on these documents.
Exactly. We're filtering out the jargon, looking at overall growth, which parts of the business are doing the heavy lifting, and also, importantly, the risks and opportunities they themselves are flagging.
Okay, let's get into it. Starting big picture. COSCO's consolidated revenue for fiscal year 2024. It landed at 242.316 billion Philippine pesos.
Which is up quite a bit from 2023's 219.444 billion.
Right. Doing the math quickly, that's about a 10.4% jump. Pretty healthy increase.
Yeah, definitely. And remember, consolidated just means everything rolled up together, all their different businesses, their subsidiaries.
Got it. Like a group total. So how about profit, the bottom line?
Even better news there, actually. Consolidated net income for 2024 was 9.314 billion Philippine pesos.
Okay.
And that's way up from 6.175 billion in 2023.
Wow. Okay, that's, hold on, like a 50.8% increase. That's huge.
It is a really significant profit surge in 2024. But, these big numbers are great, but to really understand why, we need to look under the hood, right? See how the different parts performed.
Absolutely. Which subsidiary is pulling the most weight? My guess is probably the grocery side. Puregold Price Club, PPCI.
You're likely spot on. The reports show Puregold's own store sales were up 4.5%, and the S&R Warehouse Club saw sales grow by 6.4%. People loved their bulk buys, I guess.
Yeah, I'll argue with that.
And critically, this translated to better profits for that whole grocery retail segment. Their consolidated gross profit went up 11.5%.
From about 35.4 billion pesos to 39.5 billion pesos.
Exactly. And gross profit is, basically revenue minus the direct cost of the goods they sold. So They weren't just selling more stuff. They were likely managing costs well, too.
Makes sense. Okay, what about their other ventures? Like the Keepers Holdings, the liquor distribution folks, TKHI?
Ah, yes, the Keepers. They had a good year, too. Revenue from external customers climbed from 16.3 billion pesos to 18.5 billion.
Let's see, that's roughly 13.5% growth?
About 13.58%, yeah. And their segment profit, even better, up from 2.9 billion pesos to 3.5 billion.
That's a solid jump. What's the percentage on that one?
Around 21.3% increase in segment profit. So, yeah, strong demand and good performance in the spirits business, it seems.
Definitely raising the bar, or the bottle. Okay, so groceries and liquor doing well. What else is in the mix?
Well, their specialty retail, think office warehouse, that one actually saw a slight dip.
Oh.
Yeah, revenue down a little from 2.15 billion pesos to about 2.08 billion. Segment profit also slipped a bit from 78 million pesos to 65 million. Maybe less demand for staplers?
Huh. Could be. Sometimes the digital office wings, I suppose.
Maybe. But then you've got real estate and property leasing. That segment showed some positive movement.
Okay.
Revenue up slightly from 1.95 billion pesos to 2.05 billion pesos, roughly. And segment profit grew nicely from a 932 million pesos to over 1.1 billion pesos.
And the report mentioned their rental income alone was 1.1 billion.
That's right, from the properties they lease out. So that's a steady income stream for them.
Good foundation. Now, there was something new, wasn't there? Energy.
Yes. Big move. Energy, oil, and mining. In 2024, this segment brought in almost 492 million pesos in revenue.
And that was from zero the year before, right? Because it's new.
Exactly. And it generated a segment profit of 177 million pesos. This includes Canturan Hydropower, acquired in March 24, and Matuno River Development, picked up in September 24.
Interesting. So they're diversifying into hydropower. Seems like a smart strategic play, given the focus on renewables.
It really does. Getting into that space and generating profit relatively quickly looks like a promising new direction.
Okay, so pulling it all together, even though the parent company's statements don't give us the exact net income slice from each subsidiary.
Right, not in the parent-only financials.
It seems pretty clear. Puregold, the grocery giant, is the main profit engine here, doesn't it? Just
Yeah.
based on the sheer size of its revenue and gross profit.
That's the most logical conclusion, yeah. The scale of their retail operations points strongly to them being the biggest contributor to Costco's overall bottom line.
Okay, now let's shift focus slightly to COSCO Capital itself, the parent company. How's its own health looking? You mentioned dividend income.
Yeah, the parent company received dividends from its subsidiaries. In 2024, that was about 2.4 billion pesos.
Which is actually a little down from 2023's 2.5 billion.
Slightly down, yes, but still a very substantial amount flowing up to the parent. Could just mean subsidiaries reinvested a bit more in their own businesses that year.
Fair enough. What about dividends paid out by COSCO Capital to its own shareholders?
Ah, good point. They declared a cash dividend in May 2024. It was 0.210 Philippine pesos per share. That totaled about 1.48 billion pesos. And importantly, they noted this was a 20% payout ratio based on the 2023 net income.
So they're giving back a fifth of the previous year's profit directly to shareholders.
Exactly. Shows a commitment there. And they were also active in share buybacks.
Right, buying back their own stock.
Yeah. They spent nearly 500 million pesos more on treasury shares in 2024, bringing the total held up to 2.44 billion pesos. It often signals they think the stock is undervalued and boosts remaining shareholder value.
So you've got this picture emerging. Strong net income growth, decent dividend payouts, plus share buybacks.
Mm-hmm.
What does that combination suggest for the future? The report hints at return on equity.
It does. When you see that kind of performance, growing profits, returning cash to shareholders via dividends and buybacks, it creates positive pressure on return on common equity, or ROE.
Which is a measure of how well they use shareholder money to make profit.
Precisely. And the implication is, if they can sustain these trends, keep the net income growing, maintain payouts, continue buybacks, there's a real possibility their ROE could push above 10% in the coming year.
So sustaining this momentum is key for hitting that potential 10% plus ROE mark. And overall, their balance sheet looks strong. Assets versus liabilities.
Yeah, the documents show current assets well above current liabilities for both years, a solid financial footing.
Okay, but it's never all smooth sailing.
Yeah.
What do the reports flag as potential bumps in the road? Risks.
Well, the usual suspects for businesses like these, supply chain issues, shortages, disruptions, price swings, they say they mitigate this by watching inventory closely and having multiple suppliers.
That's smart. What else?
Fierce competition in retail, especially on price. Their plan there is basically expansion and staying competitive on pricing. Makes sense.
Standard retail playbook, really.
Pretty much. They also mention environmental risks. For real estate, things related to climate change impact. For oil exploration, the inherent environmental considerations. They state they manage this through careful site selection and following regulations.
And cybersecurity. Always a big one now.
Definitely flagged. Data privacy, too. They mention having data protection measures in place and complying with the Data Privacy Act. You know, standard corporate diligence these days.
Right. Table stakes almost.
Okay.
Okay, so those are the risks. What about the flip side? Opportunities.
Plenty mentioned there, too. The move into hydropower we talked about is a big one, especially aligning with government pushes for sustainable energy.
That seems like a major strategic opportunity.
Absolutely. Also, continued growth in digital, using apps, loyalty programs like Puregold's program to connect better with customers.
Building that customer relationship digitally.
Yeah. And they also highlight their commitment to sourcing locally and hiring locally. Good for community relations, good for the local economy, builds goodwill.
And potentially strengthens their brand.
Could do, yeah. And finally, their own internal efforts on energy efficiency and renewables, like that Puregold example, saving over 9 million kilowatt hours through renewable energy use.
That's impressive. Saves money, and it's good PR, good for the environment, win-win-win.
Exactly. It shows a focus on sustainability that can, reduce costs and also appeal to customers and investors who care about that.
So wrapping up our deep dive on COSCO Capital's 2024. Strong growth overall, both top and bottom line.
Yep, impressive numbers.
Puregold looks like the main engine, but the Keeper's liquor business also performed really well.
Solid contributions there.
The parent company seems financially healthy, returning cash to shareholders and eyeing that potential 10% plus ROE if things continue.
A key potential milestone if they sustain the momentum.
They're aware of risks like competition in supply chains, but also pursuing big opportunities, especially in energy and digital.
And sustainability seems woven into their strategy now.
So yeah, that's the gist we extracted from the financial statements and annual report. The core story, without getting lost in every single line item.
Hopefully a clear picture of their performance and outlook based purely on the source documents provided.
Definitely. So here's something to think about. Given this big strategic push into energy, specifically renewables, alongside their sustainability efforts across the board, how might that really shape COSCO's long-term future and maybe its resilience, in the Philippine market?
Yeah.
Worth mulling over.
A very relevant question for their future trajectory.
Indeed. All right, that's it for this deep dive. We'll catch you on the next one.
Liked what you heard? Drop a comment, and share this episode. Hit subscribe and tap the notification bell. We've got more insightful market ideas coming your way. Catch you on the next one.